Hello, everyone. My name is Dan Holloway. I want to welcome you all to our webinar on how to power and charge up your California properties with no capital expenditure. We are excited to have you all here, and we hope we can provide you with some information that can help you to take advantage of some of the latest renewable energy technologies to improve your business's overall profitability. Electric vehicles have made a big splash in the past couple of years, and we would like to show everyone here how combining solar with EV charging can offer some substantial monetary benefits to property owners that are looking to, improve their overall cash flow. So with that, let's jump right into the agenda. So for today's presentation, we will provide a quick overview of sustainable capital finance and then move into a quick overview of the EV charging market itself. We're going to cover why the demand for chargers is surging right now. We'll touch on some of the different applications for EV chargers based on business types. And then we're going to get into how adding solar to EV charging can boost overall returns. We'll then cover the best locations for EV charging, provide you with some stats that encompass the major trends that are driving both EV sales and the EV charging market in general. And then lastly, we will review our value proposition and share with you an example project so you can see the numbers for yourself. At the end of the webinar, we will reserve some time for Q&A, so we would ask you to save your questions till the end when we will be happy to answer as many as we can. So a little bit about us. Sustainable Capital Finance provides third-party PPA financing, power purchase agreement financing, exclusively for renewable energy projects, primarily in the commercial and industrial sectors of the market. We work with a broad base of property owners, contractors, and developers across the country and provide project financing for projects on both the commercial as well as the nonprofit side of the market. The majority of our projects have historically fallen into the nonprofit category, including a lot of schools, municipalities, HOAs, some larger churches, but a significant percentage of our projects also fall into the commercial side as well. And this has become much more common once we began offering electric vehicle charging to our overall offering. We have financed more than 100 projects to date, totaling more than 250 million in CapEx, and we work with some of the largest institutional investors in the country. So just to provide some background on electric vehicle chargers for those who may not be aware, there are currently three levels of chargers. Those are level 1, level 2, and level 3. The level of charger refers to the voltage for each one. For instance, a level 1 charger, also known as a trickle charger, runs at 120 volts and typically provides 1 to 2 kilowatts of energy to the vehicle. Level 2 chargers run at 240 volts and provide somewhere between 7 and 12 kilowatts of energy. And level 3 chargers, also known as fast chargers, run at 480 volts and range pretty broadly from 50 kilowatts on the low end up to about 180 kilowatts on the high end in total charging capacity. If you were to look at the currently available public charging stations in the United States, the vast majority, I would say over 80% of those are level 2 charging stations. So as a point of reference, home chargers are all level 2 because homes only have access to 240 volt electricity. The typical EVs today have a battery capacity of somewhere between 80 and 100 kilowatt hours. It's a broader range than that, but that's pretty typical. When you do the math, you find that for a level 1 charger, if you have to charge, let's say, a 90 kilowatt hour battery, you're looking at a minimum of 50 hours of charging time and probably substantially longer than that, depending on the amperage rating of your trickle charger. For level 2 chargers, it's considerably better, charging a 90 kilowatt hour battery in only 6 to 9 hours. The main reason this works so well for home applications is that it's easy to charge your car overnight when you're asleep. So the longer charge time doesn't really become a problem. Level 3 or fast chargers are just a completely different type of technology and somewhat of a game changer. A typical 150 kilowatt fast charger can charge a 90 kilowatt hour battery in just 40 minutes. Most customers that use fast chargers are really only looking to top off their batteries, usually from, say, 50 kilowatt hours to 80 kilowatt hours. And this can be done with a fast charger in just 12 minutes. So it's a wildly different type of charging application, and it's much closer to what we expect when we go to, like, let's say, a gas station. And that additional 30 kilowatt hours, just to put it in perspective, would provide typically about 100 miles of additional range. So now let's talk about where the different levels of chargers typically make the most sense. So for level 3 chargers, because the charge time is typically in the, let's say, 15 to 45-minute range, the most desirable locations are sites where the customer is only planning on staying there for a similar period of time. For example, more than 15 minutes and, let's say, less than an hour. Some good sites for level 3 fast chargers would be restaurants, shopping malls, and grocery stores. And there are other sites you could think of, like gyms and car dealerships tend to be good ones. For level 2 chargers, you need customers to stay there for a minimum of several hours to get any sort of reasonable amount of charge. So for level 2 chargers, some good locations might be office buildings, multifamily and apartment buildings, and schools. All of these application, you've got a customer typically spending a minimum of 6+ hours there, so the math tends to work out pretty well. So, as a part of our offering, we also include solar with all of our EV charging projects. There are a host of benefits that come from adding solar to electric vehicle charging, and we just want to cover a few of them here. In addition to receiving a percentage of the charging revenue generated by the EV chargers themselves, we also offer a power purchase agreement to the property owner to offset their building's electrical load. In the event that it takes a while for EV owners to begin using the EV chargers, we can send the electricity generated by the solar system directly to the building itself. And this will lower the property owner's electricity bills. And then as the EV chargers grow in usage, the electricity provided by the solar system will lower the average cost of electricity that gets sent to the chargers. The addition of solar also provides additional tax benefits that may not be available to EV charger only projects. As a general rule, we find that customers looking to add EV charging to their facilities are also often interested in adding solar as well. So it's a lot easier to add them both at the same time, so the construction process only has to happen once. And then lastly, adding solar allows the property owner to check both the EV charging as well as the solar box if they're looking to meet specific, what we call environmental, social, and governance, or ESG goals. That's a popular buzzword in a lot of marketing materials that are being sent out these days. All right, so let's talk about what makes a great location for an EV charger. So during our investigation into the EV charging market, we found that there are a number of factors that lend themselves to charging stations that have high utilization rates, or ones that get used the most. So let's go through them. The first factor is really just picking the best locations. As I mentioned already, we are looking for sites that already have a lot of traffic, and where the typical customer is looking to spend at least 15 minutes to an hour using the services on site. Currently, we are only supporting EV charging projects in California. There are a number of reasons for this, but the main ones are the availability of tariffs that do not have demand charges, as well as local incentives such as the low carbon fuel standard, or what we call the LCFS credits, that make financing these types of projects significantly easier in California. We are certainly looking to expand into additional states as new incentives and tariffs become available, but for now, we are only based in California on these types of projects. In addition, we want our chargers to be as visible as possible from the surrounding roads and freeways. And good sites will also have ample parking such that we can use several spaces for EV charging itself. And then lastly, we want all of our sites to be easy to access. In other words, we want them to be as close as possible to major freeways, highways, or major roadways. So now some fun stuff. We want to share with you some of the data that we've compiled that shows why we think everyone should be really excited about the EV market. Let's start off by touching on some of the highlights of the EV market for 22. So first off, 2022 was quite a year for EV sales. The most interesting stat, at least in my mind, is that over 20 automobile manufacturers launched their very first EV model, with some launching more than one. EV sales topped 900,000 units in 22, up more than 65% from 21. And in the first quarter of 23, This massive uptrend is continuing with 250,000 units being sold, and this number is expected to ramp through the end of this year with north of 400,000 units expected to be sold in Q4. EV sales as a percentage of total car sales almost doubled, going from 3.1% in 21 to almost 6% in 22. And in Q1 of this year, that number continued to escalate, hitting 7.2% and is expected to hit the 10% milestone by the end of the year. Based on current growth projections, EV sales are expected to reach more than 50% of all US cars sold by 2030, and that is only 7 years away. That means if you do the math, by 2030, we would expect to see more than 7 million EVs hit the road in just that year alone. And when you add up all of the EV sales between then and now that are expected to be sold, you will have something north of 15 million EVs on the road by then. And that, my friends, is a lot of EVs, and all of them are going to need to be charged. Add to this that the fact that more than a third of the US population does not own their own home, and hence home charging is not really an option for these people. And public charging really needs to fill this massive gap. So let's see what's happening on the EV charging side of the coin. In 21, there were a total of 114,000 publicly available charging stations in the US. Of those, 22,000 were fast chargers. As we said earlier, those are chargers that range between 50 and 180 kilowatts in charging capacity. And the remaining 92,000 were level 2 chargers. That means that over 80% of the market is still level 2 chargers, and those are incredibly slow. If you were to compare the total number of EVs on the road today, 2.3 million, versus the total number of publicly accessible chargers available, you'll see the ratio is more than 20 to 1, and that is just a massive disparity. Another interesting stat is that while the number of publicly accessible chargers grew by 40% last year, which is, it's a huge amount, the number of EVs sold grew by 65%. So what we're actually seeing is that the EV charging market is actually falling well behind the EV sales market. So bottom line here is we simply need a lot more chargers out there, and that's the gap that we're trying to fill right now. So what are the benefits that SCF is offering as part of our EV charging program? So let's quickly run through them here. First off, no investment needed. SCF covers the cost of all the equipment, the permitting, and the installation. So there's no money out of pocket for anything from the property owner. Property owner also gets to participate in a portion of the revenue generated by the EV chargers. And as usage of the chargers grows over time, so does the revenue to the property owner. And even if the chargers don't get used that much initially, which is somewhat common, SCF also provides a PPA, which allows the facility owner to save on their electrical bills until the usage starts to really increase. Property owner also gets to offer a new amenity to their customers in the form of fast charging. This has become a highly sought after commodity. In some areas, we're actually finding people queuing up for fast chargers just because it's so much faster than using a level 2 charger. There's also an opportunity to draw in new customers who have come primarily for the fast charging, but are staying for whatever services that are located on the property. SCF covers all operations and maintenance costs, so there's nothing to manage for the property owner. And then lastly, SCF works with some of the strongest financial partners in the industry with market capitalization in the tens of billions of dollars. So, we're going to be there for the long haul. So now let's get into some numbers. So we put together a pretty representative project so you can see what all this equipment actually costs. In this example, for a single site, we would be installing 150 kilowatts of solar. In addition, we'd be including 4 180 kilowatt fast chargers as well. When you add up all the equipment costs, the installation, permitting fees, etc., the total cost of the system would be about 1.3 million. So we just want to provide you with some idea of what the actual equipment cost would run. So what does all of this mean to our customers? So in this example, we're providing both a power purchase agreement as well as a share of all of the EV charging revenue. A lot of our customers have multiple sites, so to be a little bit representative, we've imagined a 5-site project with 4 chargers installed per site. For this project, we are providing a 10% share of the EV charging revenue and a PPA rate that provides a 10% savings from the customer's current cost of electricity. And that's based on the amount of electricity that we ultimately send to the facility versus the chargers. So understand that whatever electricity is generated by the solar system, it can either be sent to the EV chargers, to the facility, or to both. What that means in terms of dollars is shown in the yearly figures just above the graphs. So in year one, if all the electricity is sent to the building in the form of a PPA, across the 5 sites, the property owner would save $18,000 a year on their electricity bills. And that number will just increase over time, typically because that energy rate is fixed from our side, whereas the cost of electricity is going to grow over time. So those savings will increase year on year. If the EV chargers begin getting used immediately, and we were to assume 2 hours of usage per charger per day, then the total revenue generated by the chargers would be $1.18 million, and the property owner would collect 10% of that amount, or $118,000 a year. And that's a pretty substantial amount of additional revenue to the facilities, and revenue that can be used to boost borrowing capacity or just simply to increase net operating income. All of our chargers show up on the main platforms such as ChargeHub, PlugShare, ChargePoint, etc. But it can take a few months for EV owners to locate and kind of build those charging habits around our EV chargers. So one of the unique things that SCF offers, at least that I've seen, is the ability to send that electricity directly to the facilities on site. So it's a win-win for the property owner. The highest use case will always be the EV chargers themselves, but in the event that it takes some time to reach substantial utilization for the chargers, our customers will be offsetting their electrical bills in the meantime. So I want to thank you all so much for attending today's webinar. I hope you learned some useful information and that you're excited about the prospects that EV charging might have for your facilities. This is an exciting space, and we would love the opportunity to have all of you participate in the significant growth that we think will occur in the EV arena over the coming years. If you have a property that you would like us to review, you can reach out to me directly, either via my email or my cell, which is listed below. If you'd prefer, you can also reach out via our inquiries email address, which is inquiries@scf.com. And with that, I'm going to hand things off to my colleague, Matt Brown, who will be running the Q&A portion of the webinar. Please send us any questions or comments you might have, and Matt will be happy to answer as many as we can get to. Thank you so much, everyone. Appreciate your time.
All righty. Thank you, Dan. If you have any questions, feel free to submit them in the questions box. You should see it on the right-hand side. I got a few questions here that I'm going to start going through. Okay, so what happens if it's a new construction site and there's no existing utility bill data? So in that scenario, we would request an energy audit report. Those are usually calculated by third parties. We're pretty much in that scenario just really looking to calculate the expected load. From there, we can obviously project the amount of solar. That's obviously going to be a big component of the overall structure of what we're offering you as a solution for your site. So completing that energy audit report will definitely be a necessity at some point in the pre-diligence process. I'm looking at a question regarding incorporating energy storage. So historically, we've looked at opportunities in the perspective of, how does solar pencil from an economical standpoint? Does it work? Are we providing these savings? And then from there, we would look, okay, if we pass that first test, can we incorporate storage? Does it increase those savings? And a lot of times, it really comes down to the energy use profile of the off-taker. If they're positioned in an area where they're particularly disadvantaged due to high demand charges, that could be a scenario where their avoided cost of energy really shoots up with the addition of battery, essentially meaning that they're really recipients of a high demand charge. But looking back at least in the last 12 months or so, energy storage has been definitely a culprit or at least a target for lead issues and just getting storage pieces and manufacturing components has been difficult, and obviously that's kind of added to an overall structure that has made it a little bit less economical in certain areas. But we can definitely take a look. We have good relationships with storage analyses software companies that can definitely look at a case-by-case basis and see maybe where a smaller battery, whereas some of the normal 120 kW batteries are bigger, can take up half a parking spot. Maybe in the future those might look a little bit smaller, take up a little bit less space, and really just increase the savings profile of the off-taker. What's a general good rule of thumb for a PPA rate? I would say that if the avoided cost of power that the off-taker you're currently paying is around 10 cents or higher, that's going to be a good chance that solar is going to work in those markets. If it's lower than that, we're going to need additional incentives to really finance those structures. But I'd say around 10 cents or higher, we can definitely look and be competitive with the overall component with EV. Question here on tax credits. So we will monetize all tax credits associated with the solar, as well as the EV charging. Obviously, with the IRA being released at the end of last year, we're definitely able to incorporate ITC adders where plausible. So if we're in a low-income area or an energy community area, or we're looking to use domestic content, they released some guidelines on that last week. Those could definitely help with the revenue share that we're projecting, and obviously the PPA rate that we're looking to support. We'll monetize all those tax credits and pass them along to you. How many miles off the main highway in a rural area is it acceptable for a charger? So, I would say a good rule of thumb really is that you're going to want to be in high traffic areas. Those are just always going to be much easier to develop the base case for and a use case for. I would say it obviously depends on the state and the area, but generally if you're 3 to 5 miles plus off of a federal corridor or just an urban hub, it's going to be a tough pencil for us. And that really just incorporates, in scenarios, that's part of the usage component, but you couple that with, do we have incentives available as well? Obviously, probably not going to be a significant amount of incentives for EV for some rural states, but obviously, just looking at the total structure, looking at all the options available, how can we make this work? Is going to be a good thought process to start with. Can we just do EV charging stations and not the PPA? So historically, we've been a primary provider of PPAs. So that's really what our bread and butter has been, and what we're very familiar with, and understand how to transact the power purchase agreement and do it in a really expedited way. And really, the PPA is just an addition to the charging stations. We'd like to build them in the sense that we're building the solar for the charging stations, and the PPA really is just a component of a backbone, if you will, for the off-taker as a savings component. But then also, incorporating the charging stations is really where we want all that solar power to go to. Obviously, we don't have the infrastructure currently, whether that be California or any state in the U.S., for the amount of chargers that we need to match the amount of EVs that we're going to have out there. So, expecting and assuming for that, we really think is going to be a safe assumption, and one that's the most likely for us to drive the most revenue for you. Looking at any other, so can you do revenue share percentage higher than 10? Generally, we believe 10 to be a very solid number and a respectable offer to our off-takers. Like I just mentioned before, that 10% coupled with the PPA, really is an attractive offer to incorporate at your respective site. question here on, is the solar going on a rooftop, or can a carport be included as well? Absolutely. So, we can, I think carports really are kind of how we'd like to build a lot of these, just based on some of the off-taker types that Dan has mentioned over the course of the webinar today. So we can definitely incorporate, wherever the space is allowed, really is kind of structure that we're going to take to make it work. And then a question here on next steps. So we are very, very, very close to building out our direct user interface for our SCS suite. So historically, it's just been for our developer partners, but we are very, very in tuned and really trying to build what's going to be the best customer profile for you as you track your project, as you get in touch with our project analysts to get the best updates and best information possible in the quickest way. And so that ideally is going to be our next steps, is that reach out to Dan and or myself, and we'll mbrown@scf.com will be my email, and we can take a look at that and really get a good feedback for you on kind of what the next steps are, and whether or not solar and EV is going to be a great service at your site, and then obviously get back to you with that information, and then obviously ideally move forward to next steps and further discussion to what we project at your site. So I think that's all we have for you today. We do have a frequently asked questions page in our suite, so that if there's anything that I didn't get to today that might be helpful, going through our next steps process and getting yourself a account with us is obviously going to be a great way to just get more information if you have anything that you didn't get answered today. So appreciate all you guys attending, and we look forward to catching you at our next webinar series. Thanks.